Welcome to another episode of Growing Ecommerce. We are your hosts, Mike Ryan and Chris in a return to form in a three-piece suit, just the way we would expect.
I told you, this is my way to be somewhat different to you, because in all other areas I feel so much under pressure. Man, overdressing is my way of telling you I'm ready today.
All right, Chris. Good. I'm ready too.
Shit.
Damn,
I didn't expect it.
I was counting on the opposite. So we've got a couple of topics in mind today. Let's jump into some numbers first. Q3 numbers are all fully reported by now, and actually
quite underwhelming, honestly.
Underwhelming, Chris.
No.
What does it take to impress you?
No, it's crazy. So, to be precise, ladies and gents, earnings calls have been or are in the books.
Yeah,
a couple of weeks past now, and the numbers, I would say, stay very solid, even if with some time to reflect on it.
Yeah.
I think the one major takeaway, I mean, depending on which companies we want to talk about, but I think one major takeaway is that the consolidation of revenue growth and first and foremost earnings is in full swing. These 3, 4, 5 dominant companies, they are ruling the world, for better or worse. But it's absolutely mind blowing what numbers they put up again.
For sure, the EU Commission says for worse, but
yes,
that's been there.
You, as a proud American, have probably a different view.
Yeah.
By the way, I have a different view as well. I mean, I like what these companies are doing for the most part.
Yeah, they
are driving innovation, and the numbers are crazy, honestly speaking.
Yeah, I mean, absolutely. I've got the advertising figures up here, and
for Google,
YouTube as a subset of Google, Meta, and Amazon. But yeah, I mean, let's talk about Google first, because in the past we were saying that what were they up? They were like up 11.2 or something.
11.7.
Yeah. Okay. Sorry. Yeah. And we're saying that's a bit of a narrative violation, or is it this Kodak moment we're talking about? Is Google just a chicken running around with its head cut off and it hasn't realized yet? But we're now at another quarter of gravity-defying results, if that hypothesis were true, because we're up even stronger, 12.6% year over year.
And again, we are talking about revenue levels.
Yeah,
it's the core product is rolling, and I think Google is not the beheaded chicken. I think they're still the American eagle, dominating the space. And honestly speaking, rightfully so. The things they did in their core product or with the core product, which is Google Search, it's just good. AIOs are working. I like AI mode. I'm getting used to it.
Yeah.
And the other players, I mean, let's face it, whether we talk about Microsoft, Perplexity, OpenAI, they're doing their stuff, but it's not as disruptive as we thought. I think it's not as fast as we thought. And the numbers tell a clear story.
For sure, and YouTube is up even stronger, 15%.
Yes,
and
and let's face it, the cloud business. I mean, this is where Google, for me, always shines the most. And what I get is, of course, the analysts and the street, talking about the Wall Street, they're looking at the core product because it's the backbone. But the growth story, it can be found in AI. Google Cloud, and what they are doing there is absolutely mind blowing. I mean, I have one number with me. So the cloud grew more than 30% again. But the most interesting thing is they have a backlog of future revenues in the cloud department of $155 billion. It's just the backlog. I mean, they
insane.
That's the revenue they can count on.
Yeah,
it's really insane. And what I read again, and this is really interesting for me, that I mean, if you assume that the cloud business is more or less kind of a standard service for small and big companies, and the question is always, this is driving the analysts in their take on these big AI driving companies such as Amazon, Google, and co. What is the differentiator in the cloud business? And what Google is doing better than others is that they really smartly embed Gemini into the cloud services, and it's really. I mean, we are working with Google very closely. They are doing a great job here, and the numbers again reflect it. So, no one-trick pony. It's certainly no Kodak moment, and I think Google is not just here to stay. I think they will dominate the space.
Yeah, I even think, meanwhile, Amazon's cloud strategy has come under increasing scrutiny. That was such a big story of the past several years, but they seem to be lagging a bit on AI integrations, like you mentioned, AI services in there. Like we were talking recently about, there's any number of AI services that Google powers through cloud too, besides their workplace integrations. It's super cool. Like we mentioned a couple episodes that using Google Cloud, you can actually have virtual try-on your e-commerce site. It's crazy.
It's really,
so these are areas where they really excel. Amazon, I want to call out. They are, by the way, this is since a longer time, but just a reminder, they are really not at their core a retail company anymore. They've become a services business. So the cloud services being a huge component of that, and the advertising services.
Sure.
But together, that's well over 50% of their.
Well over 50%. And of course, high margin driving, as we all know. I mean, this is, of course, I think Amazon is rock solid, don't get me wrong. But I think they're in the midst of this transformation. I don't think they're this classic retail company anymore. I'm absolutely with you. For me, the big question is who is getting the big pie, the big part or portion of the pie, which is the cloud business, and this I think is the massive growth story for these mega cap companies. And as of today, I just don't see what differentiation potentials Amazon will have down the line, because I think the biggest challenge is for them, as far as I know, they really have no proprietary technology with regards to a core LLM product. So I think it just makes it harder for them to really be as agile, as powerful in embedding services, because Google can they can tailor make this, whatever the strategy is, and you see it now. And so that's why, no financial advice, but honestly speaking, also in the cloud business, Google is perfectly set up to rule that space as well.
Yeah, totally. And
5 years ago, completely different story.
Yeah, that's right. But they've executed, and Gemini is not only integrated in their products, by the way, but it's now powering Siri, as we found out. I don't know what powers like Rufus on Amazon side, to be honest. But that'll be interesting to watch. I think Amazon they're making some very narrow plays that make sense for them, like Project Starfish. Is this way of applying AI to product knowledge or product graphing to create like this ultimate map of items and item information. So they've got cool stuff in the works, but yeah, I agree. I'm seeing a bigger picture.
Yeah. I think, and to our listeners, you probably have still moment our discussion about. I mean, we can talk about the numbers all day long. The numbers are great, and the revenues. The question is how sustainable these numbers are, and of course the question begs how much of a bubble is implied here or implicit here, and this is probably the one risk these companies have, that they can't find sustainable enough monetization strategies with regards to their AI businesses.
Do you know why I'm smiling right now, Chris?
Because I changed my take on this.
Yeah,
I just read a bit more, and I'm not worried. But of course, I mean, if you look at the burn rates, especially of of certain players on the market, yeah. I mean, I think this can't run like this forever.
Yeah.
But again, the difference is if you look at Google, for instance, they are such a healthy company.
They are.
It just doesn't matter what capex they're calling. By the way, I think they want to invest roughly 250 billion next year.
Yeah, but it's not about if Google is healthy or not. Hold on, we're getting off topic here, but let's just let it run for 1 minute. Please, thank you, dear listeners and viewers, for bearing with us. But it's not about if Google is healthy or not. Everyone knows Google is healthy. Is OpenAI a sustainable business model, or will OpenAI fold? And if OpenAI folds, will NVIDIA fold? And if NVIDIA folds, what happens? Do you hear what I'm saying? It's a different...
I hear what you're saying.
That's what I'm saying.
I think NVIDIA will make sure that OpenAI doesn't fold.
Yeah, well, OpenAI, I think, was already hinting at, like, we're kind of too big to fail. Maybe we would maybe need a bailout if something would happen.
Probably they became too big to fail.
They did.
No, but I hear you. I mean, I think we should talk about that bigger discussion of how healthy the whole economy is and what drives the economy right now, which is cloud AI for sure. And I mean, I'm with you. I think I would still be the bull in our discussion, and you rather the bear. But I know where you're coming from. This monetization strategy. This is where I think, of course, this is the challenge, especially for OpenAI.
Yeah,
for sure. Yes, they're still burning massive loads of money.
For sure.
However, the earnings calls were all rock solid. Whether you talk about Meta, Amazon, Google, and it's really fascinating to see these numbers.
I mean, let's use that as a transition. Let's return to Google for a minute.
The reason why they earn so much money.
Yeah, the reason why they earn so much money.
What do you think it is?
Well, they sell these little things called clicks, Chris.
What is a click, actually? What do I get out of it?
Actually, that's a topic for, I want to talk about, on another episode, I want to talk about demand gen campaigns, and maybe there's a little tangent in there. What is a click? Because it comes up. But something that we were talking, I think on the last episode, we were talking about really themes that are hot with our clients right now. And one of those, shame on me, I haven't really looked at Google CPCs in a while. It's often there's nothing there.
I was here for you.
Yeah.
No, really, because this was a great discussion we had. And by the way, you are right that it varies from industry to industry, because this was the statement that I think I was too bold by stating the CPC currently is just a shit show. It doesn't matter where you look into. You're right. There are significant differences.
Yeah.
But I think overall.
Yeah. And that's like, it spurred me to follow up on this because, like, often it's just basically nothing to see. It often broadly matches Google's reported numbers for CPC. It often broadly matches inflation, but we were seeing some weird stuff that CPCs were exploding. So I looked at a lot more data, and I found that something is going on. So it's often overhyped, but this year to date, we're seeing basically CPC inflation. If you look at what has happened since week 1 of this year, upwards of 30%. And right now I'm talking about PMAX and Shopping. And especially since June, this has gotten out of control. And as in year-over-year terms, this has gone from about 8% to, again, also upwards of 30% year-over-year.
Yes. And the last time I checked, in the real inflation, I think it's not at 30%, right?
No. So exactly.
So there's something going on, and I mean, just because we were talking about these little things we call clicks and 30%, 20%. But at the end of the day, and this is the crazy thing, and when we talk about our clients, because there's always this discussion, okay, what can we do better, within the campaign setup?
Yeah.
Does make this campaign structure more sense than others? And how do we score the products better? At the end of the day, if you look at an environment where the average CPC rose 30% year to date, ceteris paribus is if everything else stays the same down your funnel, it means you have a 30% hit to your bottom line.
Yeah,
30%. And we talked about that, Mike, when I was at Dublin and I was talking to high-level Google reps. I told them, look, I think your product portfolio is powerful as ever. But this CPC inflation, I think it's to a certain degree a threat to the business model of Google, because it will it will force especially small middle businesses out,
Yeah.
right? They are forced out of Google, and I think this lack of diversified results on the Google SERP will maybe also have a negative impact on the overall perception of the Google product, which is mainly Google paid search. So I think this is a real thing, and I don't know what Google can do about it, but 30% is insane.
I know, and I don't. I don't know the causes for this yet. I mean, I might be able to find out some or form some hypotheses. I might not be able to when I look at this further. But what I can say is that this is not equal between PMAX and shopping. So PMAX has higher CPCs in general, and I can't perfectly isolate yet the shopping CPCs within PMAX because of how it's built, but it's mostly shopping to us.
I think 90%, right? Whether you have assets,
that's like that's like the median, but I think PMAX CPCs are up about, if I remember, about 18%, and then shopping is up about like 36%. So shopping has really been accelerating and coming closer to the level of PMAX CPCs, and I don't know exactly what is going on or why, but it's like you said. This is overall. This is kind of a macro trend within the advertising channel. It's a weather event. Everything else that you can do becomes subject to these things. If the value per click is not also increasing proportionately.
We have some numbers here, right? I mean, you will talk about these numbers that in general the click Google produces for the retailer is the click price is in general positively correlating with the values. I think Google is doing its job there
for sure,
but I don't know if it can offset an average 30% CPC increase. And by the way, Mike, if we stay on the topic, I think a couple of days ago I had a very interesting call with the founder of I think the leading online retailer for glasses, sunglasses, and what came across, and by the way, no big surprise here. We talked about the CPC inflation, that it's really not threatening, but it's hurting the business, right?
Sure.
And they were actively, Mike. By the way, you were part of the discussion we had. They were actively asking, okay, when these alternatives really become an alternative, like what other search products are out there? I can really, offset.
Okay, so like OpenAI is an alternative.
OpenAI, for instance, right? I mean, and I think this is what Google also have to look at. I mean, right now, you're stuck to Google because there's just no alternative.
Microsoft. Microsoft is small. TikTok search is small.
Still small.
And basically, there's no margin pressure on Google. But when you look at something like a 30% increase, I don't think that Google is just massively padding their margins all of a sudden.
I don't. There's no need to, by the way.
And I've always said, like, when they work on their margin improvement at cost per click, they're looking at these low density auctions where there's not enough competition to support high CPC, so they want to induce or they want to find a way to increase those, and that's a huge long tail of search queries for them, so it's very important for them. But I don't think that's what's happening here. When will a viable alternative become available? I don't know.
We don't know. But again, I think that technology is there now, potentially there now, to have these new disruptive approaches be just a bit faster than Google and get some traction. Talking about OpenAI here now, ChatGPT in particular. And for me, the big question is, and I assume the strategy responsible people at OpenAI, they probably have a clue about the CPC inflation. And the question is, how deep is the war chest of OpenAI, and why not offer massively discounted CPCs, especially for the beginning?
Yeah.
I mean, why not? Because I bet my ass off if people, they love Google. I'm talking about our clients, but the CPC inflation is a real thing, and if there are alternatives out there where you just get massively discounted CPCs, they will give a shot at that 100%.
For sure. It's definitely a way to draw some budget over, and I mean, the question is always like, how will advertisers view OpenAI? Will they really take budget from Google and move it over there? Will it be additive? But it's absolutely, by having an attractive price point, that could be good for them. Whether or not, like, again, they need ads to finally start monetizing. So it
They are an pressure cooker for sure. Yeah.
Yeah.
But I think they're if I had to say something about the strategy to really eat into market share of Google, I think the CPC inflation is one, or the CPC in general is one hell of a argument or value proposition.
Yeah.
The likes of ChatGPT could really, push into the market and maybe, finance this discount for a certain level.
Yeah.
It interesting times. One thing is for sure, the CPC inflation is a real thing. And Mike, I would love if you could spend some time on digging a bit deeper. Maybe there are some hypotheses. I
For
think
sure.
it's super interesting for the listeners.
Yeah, for sure. I've got my homework. I'll see if I can see what else is going on. I mean, a broader one hypothesis that I have in a general sense is that we know that organic visibility has been challenged, not so much for e-commerce yet. So that's why I wonder about this. But I think that it certainly this will happen, and it will put pressure on people to advertise. It will increase their advertising dependency, and it seems that even paid click-through rate also declines in the presence of AI content and AI services. And so, if more people are piling into the auction and the click-through rates are going down, then it will have this effect.
Yes,
this is
makes perfect sense.
One possibility, and
that big picture we should have a close look at. I mean, by the way, Mike, we didn't talk about that before, but is this the point in time where we should also talk about the market observer, or is it?
Yeah.
No? Yeah. Yes.
Yeah. We should.
Because it's interesting. I mean, maybe again, because it doesn't matter, but there's no monetization strategy behind the market observer yet. So it's a free tool, but Mike, shed some light on it, because I think it helps the online retailers to benchmark their CPC development to the market, because this is the major question everyone has. Fuck, my CPC grew year to date 25%. What's going on? Is it just me, or is it?
Yeah, exactly. Thanks for reminding me, Chris.
Perfect.
It was smooth as
very, very smooth, right?
We don't need to re-record anything. We're leaving it in.
That's the proof that we didn't. This is the proof.
This is an unscripted podcast, ladies and gentlemen.
But Mike, go ahead.
And we're leaving it in. I'm making eye contact with Kevin right now, with our producer Kevin. So, yeah. Okay.
Market observer. It's a great product.
Yeah.
What can it do?
Basically, this what we have. So when I work on data analysis, I'm manually pulling data often, and then I'm doing data clean and stuff like that. But we also have an alternate pipeline that doesn't have that dependency on me or anything like that. It's called Market Observer. It's totally free, and you can see we're relaunching it. We've actually improved it a few times over the years, but we're adding some more metrics in there, like competition levels from Amazon, Temu, Shein, eBay is on there. So we're helping you see what's happening with their impression shares, the percentage of advertisers that face competition from these huge advertisers. And we also look at things like cost per click, per campaign type. Shopping, PMAX, and search are all in there. And then other, like the funnel metrics are in there: impressions, clicks, conversions. So you can see what's happening with the overall volume. And then we get into the rates and ratios too, like click-through rate, conversion rate, ROAS. It's all in there. The other cool thing is that many of these metrics were in there in the past, but you could only see the year-over-year data. So it was year-over-year percentages. You couldn't see the absolute values. And now we're actually showing you the absolute values as well. So I hesitate to use the word benchmark because these are fictive averages or medians, and there's some industry segmentation you can do. There's some campaign type segmentation you can do, so you can approach a benchmark, but it's certainly helping you understand at a market level what's going on.
And this is the thing, and it doesn't always have advantages being big, but here, that the volume and the number of clients we have gives us the possibility to, I think, to be very close to a real market benchmark, right? In terms to the most relevant KPIs for your funnel. So it's really helpful to understand what's going on, whether it's for internal discussions, to put positive pressure on your vendors. I would highly recommend it. And like again, it's totally for free.
Say it one more time, Chris.
For now, no. It's a real cool product. I would highly recommend.
We are keeping it free, even though we incur some cloud costs, and we contribute to
Google's results.
Yeah, we were a contributor to Google's results.
And if you use Market Observe, where's the thank you letter?
I know
Google's thank you letter is still missing.
But you know, we're able to handle those costs, and so we make it available for free.
It's a great product. Really look into it.
Yeah, definitely.
How we're rolling? I mean, time up or?
Where are we on time?
27. 27?
Yeah. Should we call it? Do we do 3 episodes, maybe?
Yes.
All right.
And we call it. Because then we have roughly 30 minutes each.
Yeah, definitely. You know what? Next episode we can do
AI Max.
The AI Max and Demand Gen. Do these 2 first look things. And then we've got other content for a 3rd episode.
Perfect.
All right.
Then I mean, where did we end up? What did we say? Where should we?
We told people we were shilling for Market Observer. That's where we left, Chris. So
should we say it again? It's for free.
that you can like.
It might change
as like the cam is turning off. You can get one more in there. All right. So I think that's going to do it for today.
I enjoyed it.
Yeah, me too, Chris. I always do. Thanks everyone for listening. Let's go into the outro.
Yes.
Are you ready, Chris?
Man, I'm always ready.
No, I mean, are you ready to do it?
No, man. Come on.
Not gonna put you on the spot.
Not today. Not today, and not the next time. Maybe there. I think the Christmas episode would be a good thing where I do the intro and outro. I try to go all in.
Chris and I have been, between us, we've been really looking forward to our Christmas episode.
Yes.
We're maybe going to wear Christmas sweaters or something like that.
For sure.
Let's see.
And we have to be creative here.
But we're not there yet. A couple of weeks or some weeks to go.
The stage is yours for the outro.
All right. This has been another episode of Growing E-Commerce, brought to you by Smarter E-Commerce. To learn more, visit smarter-ecommerce.com. Thank you very much for joining, and we'll see you next time.
See you next time.
Thank you, Chris.
Thank you.